Paige Steers. I'm here at the MBA conference talking to experts. I'm here with John Manning. John, let's talk about the sources of capital in 2012. Are there new sources of capital, alternative other than commercial banks or life companies, that are really giving good, strong pricing in 2012?
There are various sources of capital. I would not minimize the importance of the life companies. For the highest quality assets and the best markets, we're often seeing 10-year fixed rate deals as low as 4% now, for example, and you're seeing on a 10-year basis. And you're seeing more aggressively priced capital, both in the banks and the life insurance company on shorter-term basis. In terms of new capital coming into the markets, one of the things we're seeing is foreign banks, particularly in the gateway cities, such as San Francisco, where I work for us.
Great. So it sounds like there is new capital, which is good. Because our second question deals with workouts and financial institutions. Are they still doing a lot of workouts, or are there fresh allocations coming for new originations in 2012?
Well, there are workouts, and they're continuing to happen. There are situations, certainly, where lenders have written down assets, and now the value has come back up above that. And again, particularly those are in locations where the economy, I mentioned gateway cities earlier, where the economy is strong, where leasing velocity is high, and as a result, asset values have come back up. So we're starting to see more transaction volume in those markets and in higher values in those markets.
Let's talk about the markets in the West Coast where you are, when you're looking at. What type of products, what type of geographies are investors looking at today?
Well, investors, of course, have been looking for multifamily assets substantially in the last few years, but you're seeing office come much back more into favor now. Last year was the year of the big pop. It's when rents went up substantially. You're talking about Silicon Valley, San Francisco, and Seattle. You know, there are rental increases in certain submarkets of 20, 30% or more in a 12-month period. And those are areas where capital will be chasing, particularly technology-driven markets. A lot of mobile gaming business, traditional software business is on the rise. The technology sector is really leading the West Coast out of its previous economic recession.
Okay, great. So you expect a stronger market from almost all sources in 2012?
Well, yes, I would say the main sources of capital, yes, that's generally correct. The life insurance, just to name those, it's the life insurance companies first and foremost. It's the commercial banks as well, and it's on the agency side with Fannie and Freddie for multifamily assets. Those are the main sources of capital. Clearly, there are also many funds that have been raised to do more transactions where there is more of a structured play to it, empty buildings, half-empty buildings. Those funds have been in existence the last year or two. They're going to be able to put more capital out this year simply because there's more positive stories out there. There's more empty buildings that are going to get leased this year, in other words.
Okay, well, we'll look for a very active market in 2012. Thank you for sharing with us, John.
Thanks for having me.